Yo, yo, yo. So, AMC stock. It's Friday, Friday, September 24th, 2021. And yeah, let's get in here and do a review of our trading day. For those who are new, welcome to the channel. Make sure you drop a like and a comment and subscribe and turn on post notifications if you enjoy the content. Make sure you watch until the end of the video before you decide that, though. And yeah, as always, the best thing for the YouTube algorithm is to watch until the end of the video. So if you're enjoying the content, that is the best way to support me. Also, I just bought a new mic, whole setup, SM7B with a cloud lifter and an audio interface. So that's pretty cool. The audio quality should be much better from here on out. And if you're not already, make sure you follow me on Twitter. I am tweeting throughout the day there. I post charts all the time, stuff like that. So yeah, follow me over there. Other than that, let's get right into it. So for those who are new to the channel, we have the bull trend line that AMC has been respecting, as well as the resistance line here at the top. So this is a channel that AMC has historically been trading in for the year. Obviously, first breakout was in January, second breakout was in June. And also I have these resistance lines drawn because we're obviously seeing somewhat of a pattern, right, of correction. And you can actually draw that pattern of correction with Fib retracements and see some of the similarities here. So with a Fibonacci retracement, you just measure from the bottom to the top of a move. You can see that in January, AMC found support at this 0.786 level, and then it really balanced out here at the 0.618. And then if you were to do the same thing with the June run, you could probably measure it from here, and you'll notice that this one actually retraced a little bit less, which is crazy. I mean, a stock that moves like this, normally when you have a real big move up, like 500%, you're going to see a big, deep retracement. And usually you're also going to see not a lot of bullish action for a while. It's going to stay in a pretty good bear trend. But with AMC, that doesn't seem to be the case. It's had a pretty normal retracement thus far to the 0.618, which is the golden ratio between the 0.618 and the 0.65. So, yeah, so that's for everybody who hasn't watched any of my videos. If you want to watch some of my other videos, you can do that, and that'll give you a better idea of how I use Fib retracement. But anyway, currently, the current move that we're in is, I think all we're doing here is we're finishing up a retrace of a wave 1 in Elliott wave theory, which is basically the first wave of 5 in an impulse wave. That's my opinion. And so, hold on, I'm sorry, I need to find my tool here. This is wave 1, 2, 3, which is normally the most impulsive, 4, 5. And then I think that currently we're in an ABC correction, which works like this: A, B, C. Well, we're not in this correction anymore, in my opinion. What I think is next is we are actually starting a second move up, which would be wave 3 in a larger Elliott wave. And so basically, the way that you can measure that and figure out that's my conviction. And based on my conviction, I would use a trend-based Fib extension from the bottom of this move to the top of wave 1, and then down back to the bottom. And this will give me an idea of the extension that we may be expecting in wave 3. Well, yeah, in the wave 3 of the 5-wave set. But to be honest with you, well, really, this is the extension of this is the extension of this first wave. And you see here, after it crossed the 1.618, it met this resistance line and got stopped out. So what we're trying to measure next is to figure out what the next 5-wave sequence, to simplify, I'll just show you what the next 5-wave sequence might look like. So just for example, because 3 is normally more impulsive, right? This is simply what it would look like. And to measure the distance that we could expect from this, we would measure wave 1 with the extension tool that I used earlier. Sorry about that. Also, if my audio cuts out or something, it might be because I move away from the mic. I have to stay pretty close to this mic, apparently, and I'm going to have to get used to it. So wave 1, down to the bottom, what I believe is the bottom of wave 2. I think that we've seen a bottom here. If anything does happen to the downside, I think it might be one like impulsive sell-off. That might be like a bear that comes in and causes that with a bunch of shorts. But I think that shortly after that, you would see some pretty aggressive reversal. And so, yeah, actually, this is a pretty good measurement, actually, of what I might expect in wave 3. So basically, what I'm looking for going into Monday is a move up, pretty aggressive here. I mean, I'm looking for some volume, maybe something a little bit less aggressive, up to this $56 level, perhaps. Oh yeah, let me make sure I call out my prices. So currently we're sitting at around the $40 level. What I would expect is a move up to like this $56-ish, $56.50 level on wave 1. And that would be over the course of a few days, because obviously this is a daily chart, so the time frame's a little bit bigger. So it will take a little while for this to play out. This just rough estimate would be September 29th, something like that. And it could be a little bit flatter than that too, to be honest with you. I mean, you could see something like this where we need that wave 1 validation before we start to move up into wave 3. And wave 3 is normally very impulsive, so it could get really aggressive after that. So you could see something of this nature. And to be honest with you, I'm looking for, I mean, this is kind of becoming the time where I think that you're going to see that support come in at this long-term bull trend. It's going to cause some pretty big emotions to come in for bulls here. That's what you should be expecting. And just for an example of that, I can show you what it would look like compared to the June run. So, and just to show you how well these tools work, if you would have done what I'm doing right now, hold on, let me make sure that I'm at this right spot. If you would have done what I'm doing right now, you could have predicted this move here. Oh yeah. I'm sorry. So actually what I would do is using this trend-based fib extension on this move, right, in January, actually gave you the top. It predicted the top pretty well here at $73.23. So on and then I'll do the 5-wave count on this so that you can see how you could have seen that happen. So this was a 1 with a 2 corrective, a 3, and then a correction down 4, and then a real quick impulse up 5. Obviously, we all remember this day. If we've been in AMC stock that long, we ran up on June 2nd. This is the type of move that I'm kind of expecting here. And if you look, you know, I mean, to me it feels like we're not really that far off of this. But man, now that I'm looking at it, you know, and this kind of goes into cycle theory. I'm looking at it again here. And I do want to talk about some of the other patterns and stuff outside of Elliott wave that I'm seeing that contribute to my Elliott wave theory surrounding this. But it is my theory that what we're seeing here is we're in the middle of a similar move to what you saw in late April to like mid-May, where you see this kind of rounded movement. I'll just get my highlighter and do it roughly. So you see this kind of rounded movement like this. So maybe what's actually happening is we're having a final kind of washout. And we did get a double bottom here, which is basically where the price, oh, my highlighter's still working, sorry. Which is basically where you see the price kind of stop out at the same kind of spot. We have a lot of reversal signals happening, like that are actually really similar too. So I'll show you another example of this. So this tweet actually gained some popularity. You have a falling wedge happening here, even with the gap fill here too. That's kind of funny. But yeah, I mean, you can draw it a few different ways, but you know, you have a falling wedge here, which is typically a bullish reversal pattern. Basically, the price is getting compressed down and then by the bears at the top, but the bulls are getting increasingly strong at reversing the price. You can see a similar pattern developing down here towards the bottom of this most recent move. And this is actually the basis of my call for the bear trap, the mother of all bear traps. I don't know what I'm going to title this video. I'm kind of getting tired of mother of all bear traps, but they do seem to do pretty well on YouTube. I think that what we're seeing here is a similar falling wedge, right, where price action is aggressive to the downside, but to the downside you're seeing less and less pressure from bears, and which is indicative of bulls being in control. And then especially at this turnaround here, you have this bull trend that I think this is going to be the bull trend that people are going to be charting going forward, in my opinion. Technical analysts that are looking at this. So what I think you could see to open the week, I mean, let's just look at the previous move here. Yeah, I mean, you could see some bottoming, maybe. Like you have, like I said earlier, you could have that situation where you got one quick move down, perhaps, down to really test this trend line, and then you pop right up off of it, and then that would kind of be like the reversal. That's like similar to what you saw here, right? You see this similar formation happening. That's the sort of thing that I'm expecting. Also, this does look kind of like the one of the ape's favorite patterns, which is the W pattern. I know that was popularized by Trey in this community, and so what you could be looking at here, and I know a lot of people are talking about head and shoulders here. I just don't see it that way, just because of the overall conviction that seems to be building in the stock. So you could see a W pattern like that. One last retest of that bull trend. I'm sorry. Maybe freak a few people out, and then it sends us back up. But yeah, so that's basically my overview. I know the past few days I've been calling for downside on the stock, and we've seen that to a degree, but it hasn't really been that aggressive downside that I'm really looking for. And by aggressive downside, I mean like one quick push down to the bull trend, and then boom, we get that reset. That's really what bulls need, I think, and to start us up here. So yeah, that's basically it. Since you're here, let's see. Okay, the video is pretty short, so I can run through a bear scenario, because I know a lot of people are saying that they want to see like a bearish take as well, and so this will be for the people who stuck around to the end, especially so that I don't get like a bunch of crazy people saying that I'm a shill or something like that. Maybe you guys appreciate somebody who's being more balanced in their perspective, and some expectations from a bearish standpoint, what could transpire, what bears are looking at, right? So bears who are just trading the stock are probably looking at this pattern here that's developing as somewhat maybe an ascending triangle of sorts. This is a pretty heavily traded zone back here, so maybe, you know, you've seen some significant rejections here, and that's likely a Fibonacci level, if I'm being honest with you. So let's take a look, just so that you can see kind of my thought process. So if you were to take the retracement maybe here, yeah, so you can see you got the rejections. Oh yeah, no, you would pull it from here. This is the better Fibonacci, yeah. And then so you see here, this is that $40.87 level. That's pretty heavily traded. Yeah, there I go again, not saying the prices out loud, sorry. So they're gonna be thinking, okay, you might have this sort of descending triangle, which is a bearish pattern that's evolving. And let me change the color so it's a little bit clearer. I just don't think this is a very good looking descending triangle. Like, I wouldn't be super excited about this. I mean, you have 3 touches, so you would say really they don't care about this, and that's why I don't think it's that good of a triangle, just because you only have this one zone where it touched, so that's not very impressive. It's too steep. It's so much more like a wedge to me, which is indicative of reversal. The other bearish scenario would be, and I'm sorry, I don't want to be so like dismissive of the bear scenario, but it's just I'm a bull on the stock, like, so it's my bias, so it's going to come out, right? The other thing that they would say is, bears would say, is that you might have a head and shoulders developing here. It's not a very good one. It's a little wonky. And so maybe they're looking for like a secondary like breakdown here. It's very Wyckovian. And I did a video on Wyckoff. Well, I did a video on Bitcoin and AMC and how they're kind of trading against each other. Basically, it seems like Bitcoin's price action, if Bitcoin goes down significantly, it seems to be indicative of a pump on AMC historically this year. And so this looks like a Wyckoff distribution pattern here that's developing when I look at it on the hourly chart. And basically what that's about is I can actually go over to the Bitcoin chart so you can see it. This is the first time that I've left the AMC chart in an AMC video. But I do think it's important for you guys to see this just so that you kind of see what I'm talking about. So this Fibonacci off of here. Maybe just go to the daily, zoom this out. So you see this, this is really weird price structure that's happening here. This is Bitcoin's run up to like 65,000. And I'll show you what the Wyckoff chart looks like, but you see this kind of, it doesn't really respect Elliott wave in a way. It does to a certain degree. I'm sure you could chart Elliott wave into this and it would make sense, but it's not really your typical kind of move. The price is kind of rolling over like this. And let me make this more visible so you guys can see it if you're maybe watching on your phone or something. So this sort of pattern, let me go pull up a Wyckoff. Look, I was trying to learn how to use my new mic and make it sound really good. So Wyckoff distribution schematic. So this is just one example, and there's a few different examples, but you can see kind of the similar nature, right? You kind of have this real choppy kind of price action. And basically what these are designed to do, it's the Wyckovian theory is based on Richard Wyckoff. He developed this theory, and his thoughts on it were that it was a strategy, and he kind of just built this chart assuming that this was what they were doing. But it's a strategy that's designed to exhaust retail traders and get them to sell at the bottom and then buy at the top of these sort of moves. And so that institutions can accumulate and create max profit. And there's also like accumulation schematics where basically this might be a chart that has basically, like, this is just a basic example of it, but an accumulation schematic where you would see the price kind of get eaten up here. So they're trading along the way this entire time in order to get maximum either profit, or they're trying to get maximum exposure to the asset for as cheap as possible. That's generally the goal of it. And by the way, while we're talking about this, I do think that Bitcoin is in an accumulation. You can kind of see the similar pattern developing here, and there's a more complicated version of an accumulation schematic where you can see this kind of trading that looks like the distribution model, but I was thinking that it was distribution the other day when I looked at it, but then I looked at a more complex accumulation chart, and it did remind me that those are out there too. So, but yeah, anyway, yeah, so just to close out, because I know I tend to ramble on a little bit, just to close out my conviction going into next week, I think we're gonna see some upside next week. I really do. I think that what do we have here? You know, yeah, I mean, you could see some breaking happening towards the middle of next week. Perhaps. I don't think we're gonna just fly on Monday. I think that bulls need to cement themselves. And cement this as a higher low, basically from here, this $29 level. They need to lock this in, right? That's the goal for bulls right now. Lock in this is the bottom of your 2 wave. And I mean, it can go lower. But you really, I mean, you do not want to extend below that $29 level, because if you do that, then bears and bulls will be looking at this almost like this is a larger correction wave. And I'm not saying that would change my sentiment on the stock. I don't sell AMC stock, for the record. I only buy it, and so I would just be doubling down as it goes down here. I wouldn't sell any of my position because I am very highly convicted that we're going to the upside. I'm very confident, but I mean, nothing is promised, right? But yeah, so bears would have a pretty strong technical case for more downside. I mean, they would say this is, or maybe this is the new trend that we're going down. We're heading in a downward fashion. Again, I would be accumulating down here at these levels. I think that this is a good price for the stock. I would definitely be entering like long-term option, like call options and stuff like that, and just waiting, because I think that the upside potential of this thing, I honestly do believe that the upside potential is very unique to AMC stock. I think there are very few things that you can buy that have the sort of upside potential that AMC stock does. And just to give you my thoughts on that, I think that we continue to retest this channel. And to be honest with you, if they were to draw it out, if bears were to draw it out and it were to go further, I just think the price at the top of this channel that we're going to eventually be testing just gets higher and higher. It's just a matter of time. And then a lot of people ask me what I think about MOAS, you know, mother of all short squeezes, stuff like that. When it comes to MOAS, what MOAS requires, if it's going to be the mother of all short squeezes and you're going to see those crazy numbers that you see people posting about on YouTube and Twitter and stuff, you're going to have to see this sort of like, you're going to see this top of this channel broken, and then you're going to see a retest of it, and it's going to just go like a retest of this, and then a break up is that's the real deal. That's what happens. And so until we leave this channel, right, this channel that we're trading in, not my YouTube channel, you never leave my YouTube channel, you just watch it all the time, but just kidding. Until we leave this channel, I don't really, you know, and that's kind of obvious to say, right? But my conviction would be that we're just going to continue to do this kind of, because I do believe that there is some sort of synthetic position, and maybe they're using this to like buy their time, or they're like slowly exiting and entering and exiting and entering in order to get profit and get out of their position, or I don't know what exactly is going on with that, but I do think that the stock is heavily manipulated. And also, I know the video is a little long now, but just to give my full thesis on that too, for anybody who's curious and still around, I think that that even if the stock is manipulated, because I get that like a million times a day on Twitter, like the stock is manipulated, you can't predict what it's going to do with technical analysis. First of all, I don't predict anything with technical analysis. All I do is look at patterns, right, that are indicative of what traders or what emotion is tied to them, and then I make an assessment based on that to see what I think is going to happen next. And it's not a prediction. I can't predict the future. Nobody can. If I could predict the future, oh man, I wouldn't even be doing that. I would be doing like, I wouldn't even waste my time with YouTube. I just trade crypto all day. And 24/7, I would, because I can predict the future, I would just make money all day no matter what. I could sell, buy, sell, buy. But you know, you see these sort of patterns, right? And I'm gonna make a video. I said this in the last video, but I'm gonna make a video where I compare this kind of cycle that AMC is in to the previous cycle that AMC was in leading up to the run up to June, and maybe even one with January. I haven't really studied before January's run, so maybe that would be interesting. Anyway, thank you guys so much for watching the video. I'm sorry that I didn't really come to a conclusion on this or anything like that. Well, I did. I mean, I do see upside for next week. But yeah, other than that, if you guys enjoyed the channel, enjoyed the video, I appreciate you guys sticking around so long. I know that this is a little bit longer. Make sure you drop a like on the video. Comment your thoughts if you have any comments or anything like that. Try and stay positive down there. You know, I'm just sharing what I see and what I think. But yeah, any feedback is welcome. I went out and got all this equipment, so I appreciate you guys watching. I really want to take this seriously and try and help people learn some stuff. So if you do find this content valuable, I also do have on my Twitter, they actually just turned it on to where you can have tips on Twitter with either Venmo or Cash App or Bitcoin. And I'll also have the links down below in the description. So if you want to contribute to the channel, that's a thing too. You can do that. It's not required. It's appreciated though. So I do appreciate you guys sticking around, and watching is plenty enough for me. That's more than enough, more than I would have ever expected anybody to do for a nerdy guy that's looking at charts on his computer. So anyway, thank you guys so much for sticking around, and until next time, I'll be posting more videos this weekend for sure. So I'll see you guys in the next videos. Take it easy.